People can join as they come. Okay, so hello, and thank you to everyone for joining us today for Workbar Live. My name is Chelsea Hildreth, the Events and Partnerships Manager at Workbar, and it's our pleasure to welcome James Grace, the Director of Wealth Management at Silver Pine Capital. He'll be presenting today on personal finance planning during uncertainty. To start, just a little bit about the company and Jim. Silver Pine Capital provides risk-conscious clients with custom-tailored investment strategies to meet both short-term and long-term goals. Jim specializes in personal finance, the importance of investments, and protecting assets through insurance and proper estate planning. He studied at Bryant University, where he was on the baseball team, has a family with 2 kids, and sits on the advisory board for Life is Good's Kids Foundation. Just a few notes for our guests. You will only be able to see Jim and I. If you have any questions or anything that you need to say, just enter them in the bottom part of your screen, in the Q&A button or in the chat, and we'll make sure we get to everything. Jim will be answering questions either throughout or at the end, so please just ask away whenever you have a question. And it'll be best to have your screen in gallery mode, which you can see in the top right corner of your screen. Okay, so Jim, thank you for joining us today. Can you please tell us a little bit more about Silver Pine Capital and your role there?
Sure. Well, first of all, Chelsea, thanks for having me. Happy to be here. Silver Pine Capital is, on a high level, a wealth management firm. So that can mean different things to different people. But the 3 ways that we typically help people most often, the first is investment management, which you mentioned. We operate as a fee-only registered investment advisor, which means that we have a fiduciary responsibility to our clients to invest in their best interests, which you would think is the case across the board, but not always the case in the industry. There's other ways to operate. We don't sell any investments for commission. We don't sell mutual funds or annuities, things like that. We don't use mutual funds because of the high cost structure. We typically use lower cost investment vehicles to create portfolios, and we do all that in-house on behalf of our clients. We also have an insurance arm in the business. So if clients are trying to protect their wealth or their business or their income, we want to make sure we can help them implement those strategies using life, disability, long-term care insurance. We don't do any personal lines insurance or business insurance at our agency or firm, but we have partnerships with people that do, and we make quite a few referrals to our partners to make sure that we're looking at how we can help people protect their overall wealth and well-being. And the third thing that the firm does, and what my primary role is to provide clients with holistic financial planning. And it's what we're doing a lot of right now, in addition, obviously, to investment management. We can talk about that a little later. But we plan, we think, a little bit differently than some firms out there. Traditionally, if you were going to see a financial planner, you might sit down with them, pay an upfront fee, provide them with information about your financial life, and then a few weeks later come back and get a report with an assessment of your situation and recommendations of what to do and how to operate in the future. We do it a little bit differently, where we extend that process out over a year plus long period of time. So we charge our clients a small monthly fee, and then we really purposely take our time to understand what the client's situation looks like, and then are with them through a longer process to coach them on strategies and make recommendations over a longer period of time. And I think what we're kind of living through right now is a good example of why we think that's a better way to do it. If you had just gotten a financial plan delivered to you in January, chances are it's dramatically been impacted by current events, right? It needs to be updated. So we just think, we want to know our clients. We want to take the time to get to know the situation and then be with them over a longer period of time is how we go about it. And we think that leads to better outcomes in the long run.
Okay, awesome. Well, we're very happy to have you today with that expertise.
Happy to be here.
Yeah. Why don't you start by giving us an overview of today's climate in terms of personal financial planning?
Sure. So before we talk about the personal financial planning side of things, I think you have to start with the healthcare crisis and kind of what kicked this off. No news, but obviously we're in the midst of a global pandemic. The last numbers that I saw, 850,000 people were infected, almost 50,000 people have passed away and counting, and those numbers are probably underreported because of the lack of testing. So you have this tragic healthcare crisis that kicked off probably earlier in this year than they even originally thought. And the only way to stop it is everybody needs to stay home. So, it's not a good idea anymore come mid-January for people to be going into a Workbar location and congregating with one another. So we're in the midst of this healthcare crisis that creates this instant shutdown of the global economy. Fortunately, it's the 21st century and there's still a fair amount of commerce happening, which is good. You can still shop online. We can connect and do things like that and operate to a certain extent. But a large portion of our economy in the United States is consumer service driven. So bars, restaurants, hotels, service industry workers are immediately unemployed. And that starts to get us into kind of where we are from a personal finance standpoint. Today's jobless claims number was 4.4 million people filed for unemployment last week. That's on top of the 22 plus million who had already gotten through the system. And there's still probably a backlog there. So 26 million plus and counting unemployed. For historical context, if you think about 2008 and the financial crisis, we got to about 10% unemployment over the course of about a 6-month period of time. We're probably pushing 14, 15% unemployment rate right now in about 4 or 5 weeks. So just dramatic changes to our economy, and that's going to have some long-lasting impacts here. Businesses, especially small local businesses, have lost significant parts, if not all of their revenue immediately. Mm-hmm. So to combat that, the Federal Reserve has stepped up and taken some historic measures to try to backstop the economy and create liquidity in credit markets. Congress has passed things that we can talk about, like the CARES Act, these acronyms PPP and the EIDL programs, to try to create solutions for small business owners to make sure that they can keep people on payroll, pay their rent, keep the lights on, things like that. So there's been a big push to try to do whatever necessary to make sure that our economy doesn't collapse and negatively impact people for too long. We're also getting the stimulus checks, which in our opinion, isn't a whole heck of a lot. And, the word stimulus is, I think, misused in the situation that we're in right now, because it's nice to get these dollars, but you can't really stimulate the economy if you can't go anywhere. So it's more of a disaster relief effort that's underway right now to kind of mitigate the damage, and it kind of remains to be seen, where we go from here. So a lot of uncertainty, I think, coupled with just the economic impact of it. And you and I were talking about this a little before we started. My wife and I are here working from home. We have 2 little kids. We're not unlike a lot of other parents, and it's just the psychological changes that have happened to everybody's life to go with the economic uncertainty have made it a really stressful situation for a lot of people. So yeah, very uncertain times, to say the least. And probably now more than ever, a good time to sit down with your financial plans and kind of think about where you're at, what's changed, where you're going.
Yeah. So thank you for that overview. What are things that we need to be doing right now in terms of our finances?
Right. So if we were going to start from the beginning with a client in normal circumstances, the first thing that we would start with is an assessment of a client's current financial situation and cash flow situation, right? And I think now more than ever, it's really important that we all take a deep breath and just fall back on the basics of that. So if you're a small business and you're going to go to a bank for a loan or looking for investors, the first thing that anybody's going to ask you for is financial statements. Show me the books. How is the business doing? What's the cash flow looks like? What are the prospects for the future? It's very much the same on the personal financial side of things, where we need to assess what our current situation is. The way that we do that with clients and encourage people to do it is first, start with a list of all the accounts that you have, list out your cash, your savings, your checking, and then also include your liabilities, your mortgages, your lines of credit, your credit card debt, your student loans, your car payments, etc. So you have your assets and your liabilities. That creates what your current net worth is, which right now we're less concerned with what that number looks like, but we want to have a starting point of what's available to us and what we're liable for, right? So what accounts do we have? What's our cash position? Our investment accounts look like? And what liabilities do we have? What bills do we have to pay? And creating that balance sheet, I think, is a first good step that anybody could take right now to start to assess where they currently stand. And then you also need to couple that with a cash flow statement. And, people budget in all different types of ways. We're less concerned how people do it and more concerned with the fact that it gets done, that you understand what's coming in terms of income and what's going out in terms of spending. And that includes not only the things that you have to pay, like your mortgage or rent or car payment, but the things that you spend money on. And both of those two things have probably changed to a certain extent, either from income or reduction of income or changes in spending. So obviously, being a part of an investment management firm, as the market has gone down, our incomes have come down as well. But we're not paying for daycare, my wife and I. So what is that offset and what does it look like? And the most important part of this process is to understand at the end of the month or the end of the week, however you want to do it, if what your income minus your expenses equals, is it either a surplus or a deficit? And I think why we're stressing to people to kind of come back to these basics is we've worked with a lot of clients in the recent weeks that came to us fairly anxious about the situation and what the future might hold. And they wanted us, or were asking us about doing things that we didn't necessarily think were a good idea, like pulling out investments, and I want to put some cash in the bank just in case. And by going through this process of understanding what your current situation looks like, creating a balance sheet and a cash flow statement with these clients, we've noticed for the most part, they're still in fairly decent shape. They still have a surplus at the end of the month, or even if they were tight, we were able to find ways that we can kind of tweak some things in a very minor way, say lowering their 401k contribution right now and reprioritizing, having cash flow versus saving for retirement. It put them back in a surplus situation. And immediately when you get to that point with a client, you alleviate some of the stress associated with going through the situation that we're going in with all the uncertainty. So again, I would advise everybody to start there. Just go back to basics, assess your current financial situation, create a balance sheet, reprioritize, and reassess what your goals are, what's important to you. Again, is it more important to have cash in the bank or keep saving in your 401k? Now that pulls in a different side of the discussion, which would be, is it a good time to invest? And we can talk about that. But just in general, if your income is down and your bills haven't changed and your cash flow is light, does it make sense to overfund retirement accounts that might be necessary 20, 30 years down the road? Or should we maybe press pause on that for now and increase our cash flow, maybe start to create an emergency fund? So just assessing your situation, reprioritizing your goals, and just having a really good sound starting point for decisions that you may need to make down the road.
Okay, and you mentioned balance sheets and budgets. Could you share some examples with us of what those should look like, what line items they should include?
Yeah, absolutely.
Ones that I think.
Yeah, absolutely. So I'll just share my screen. This is a simple balance sheet. This comes from our financial planning software. This is a hypothetical client. So when we work with a client, we input all of their data and get feeds from their financial accounts that update regularly. So with the push of a button, we can have a balance sheet, a net worth statement created. But on the asset side, you'll notice, again, this is just hypothetical: cash, emergency fund, joint investments, 401ks, 403bs, Roth IRAs. In this case, they're including their home and their vacation property. For current purposes, that might be important, but we're looking for, in a lot of cases, access to capital, and it's difficult to access capital from property. But that's maybe another conversation. And then liabilities, mortgage, credit cards. What do we have to pay? What are our debts look like? Again, this is just an example. This is a more detailed net worth statement, and this is what I would advise people to do, is just to break it out between non-qualified and qualified retirement accounts. So a non-qualified account is a non-retirement asset, which means that the tax implications of using those funds is going to
Mhm.
be less than if you were to pull money out of, say, a 401k. So breaking down what's in retirement accounts, what is cash, and cash can be invested in the stock market. But if you were to take money out of a joint brokerage account and sell stock, there's different tax implications than having to pull money out of an IRA. So with one quick caveat, I'll stop there. The CARES Act that was recently passed as an effort to help people through this situation created the opportunity for people affected by COVID to access qualified retirement accounts, specifically IRAs, up to $100,000 prematurely. So prematurely would be before 59 and a half. So you can take up to $100,000 without paying the 10% penalty. You still owe the taxes on those funds, but you can spread the tax liability over a 3-year period of time. So that's something to keep in mind if you feel like you're tight, and it happens sometimes because 401ks are the easiest place for a lot of people to invest. You get a job, you set up your 401k, and that ends up being where most of your money is. And if you
Mhm.
find yourself in a situation where you've lost income, a spouse has lost income, and you need capital, prior to this provision in the CARES Act, you'd be not only paying a 10% penalty for that withdrawal, but you'd have to put the entire $100,000 on your tax return for this year when you took the distribution. So not paying the 10% penalty and being able to spread out the $100,000 for income tax purposes over 3 years is a savings of thousands of dollars and gives you access to that capital should you need it. So again, breaking it down between what's available, what's in retirement accounts, knowing the details of how distributions and withdrawals will affect you is really important right now. As I click through, this is just an example of a cash flow analysis. Again, this comes from our financial planning software, but it doesn't need to be this fancy. But what I would suggest is if you look at the category third from the top here, food, I suggest you break that down between, in normal times, going out to eat and picking up groceries. Obviously, no one's going anywhere right now, but you want to be as detailed as you possibly can. The other thing that we see a lot when people study their budget and how they're spending money is this transaction on the bottom here from Amazon. I don't know if, oops. So Amazon just comes in as one line item. So that could be a number of different things. And it's important to try to regularly go in and try to get to a really detailed, granular level of how you're spending money, especially right now, because the only way that you can shop a lot of times, besides going to the grocery store and maybe some other places, is online. A lot of people are doing a lot of Amazon shopping. So
Right.
if we're saying that it's important to study how you're spending money and make critical decisions about what's important and what's not, you want to be as detailed as you possibly can in this type of an assessment. Fortunately, in this case, this is looking at a client spending over the first quarter of 2020, and they had a surplus. The screen's $7,000 in the top right of the screen.
Mm.
With this client, it's going to change a little bit because this is not picking up a change in income that happened roughly in mid-March. So having the ability to go back and being in a regular habit of studying where our spending is happening, we can advise this client on changes that they might be able to make. They've never watched TV. So this Comcast bill, they said they might cut because they, put on YouTube TV for the kids, or they have Hulu or Disney Plus or whatever the case. They said they don't really use Comcast besides the internet. So
Right.
that kind of gets into this idea of, what can we do now? You have to make critical decisions as to what's important, what do you need, and if you find yourself where you're in this deficit situation at the end of the month, by going through this, I would be willing to bet that there's a lot of opportunities to find savings within a budget.
Mhm.
And then what I'd also do is I would advise people to take a look at where you're spending your money, and everybody that you're paying a bill to, whether it's a mortgage or a utility, a municipality, I would call them and see what options you have to either defer or not make payments for a period of time to change your payment structure. I think you'll be surprised how many people out there are willing to work with you or already have formal programs in place to try to alleviate some of the financial burden that people are faced with right now.
Yeah.
we called our oil company as an example of the crazy situation we find ourselves in right now. Monday, oil traded at negative $37 and change per barrel, which is just
Mhm.
absurd. And it had to do with supply issues, not necessarily related to COVID, but it's just insane circumstance where oil was a negative price
Yeah.
to go along with all the other historical things that have happened. So we called the oil company to see, what programs and lock in that price over the next course in the next year. That's just one example of the things that you can do. Most mortgage companies are allowing you to defer mortgage payments for 3 months. I would do that. I would worry about, the accumulated interest over a 30-year period is going to be pennies. So if you can defer payments, if you can kick the can down the road, if you can make changes to your spending, there's lots of opportunities to do that right now. You just need to be proactive about it. And one of the ways that you can kind of get in and find those opportunities is to write down how you're spending money and go through that cash flow analysis.
Okay, awesome. Thank you. And everyone that's listening, if you have any questions, now would be the time to start, asking away. But I'll ask them in the meantime. You touched a little bit about investing. Are there places to invest right now that would be smart or safe? Should people pull out of certain investments or sell stocks? I mean, I know you're not in market trading, but what is your
Mhm.
best advice on all of that?
Yeah, so I would say that smart and safe are definitely relative terms. And I guess I should say before, given our format, anything that we talk about investments, especially individual companies that I mentioned, we're not making any recommendations. Everybody's situation is different. So please don't take anything we talk about as a investment advice. Um, but we think any money going into the stock market right now isn't necessarily safe in the short term because we anticipate that there's going to be quite a bit of continued volatility in the near term. Even fixed income or bonds, which are traditionally the safe portion of a client's portfolio, there could be some volatility in bond markets if people stop paying mortgages or bills or commercial loans because small businesses are going under, run into some trouble. That could have an impact on the fixed income markets, municipalities as well. So municipal bonds have historically been fairly safe, but states are going to be very significantly impacted and because of the support that they're going to have to provide their residents. So safe again is a relative term, but we do think for those who can stay invested, start investing right now, invest more in their investment accounts, their 401ks. I think when you look back, say in 3 to 5 years at this period of time, it's probably going to look like a pretty good time to have been invested.
Okay.
So just like in past crises in 2008, the recession of 2000, 2001, the market got through it and recovered, and you were better off from having stayed invested or been in a position to be able to invest right now. So for those who are in a position where they've got solid cash flow, they've got capital to put to work, we do think that now is a good time. With again the one caveat that we think in terms of the market will probably get worse before it gets better. We think that this thing can have some teeth that linger for quite a while. So we're advising clients who are going to invest to do it very cautiously and systematically over a period of time and not just feel like today feels like a good day to get invested and put all your chips on the table. We definitely want people to hold back cash for what we anticipate to be kind of a continued period of volatility. There's two different approaches. Obviously, having a diversified portfolio, which is common in, say, 401ks, where you have a diversified mix of investments. For those clients, we definitely don't want them to sell anything. We want them to keep investing. If you have a 401k or an account that you're funding systematically, that's called dollar cost averaging. So as the market's going down, you're putting money in, you're buying your investments at a lower cost. That's positive. The only real big changes we're making to those diversified portfolios is rebalancing. So if you had a stock to bond mix of say 70% stock, 30% bond, and the market went down 30%, well, obviously that 70/30 ratio is going to be out of whack. So you want to take some of your fixed income and reinvest back into the equity markets to get your allocation back to your original intent. And that's really important, especially right now with the volatility we've seen. And if you're going to invest in individual equities, individual companies, I would ask yourself, we ask this of ourselves all the time, which is this a company we want to own in 5 years? Is this a company that's going to be around? And if the answer to that question is yes, again, now is a really good time to look at individual companies. Disney isn't going to go out of business, I don't think, but they're going to be negatively impacted by the current events when no one's going to parks. So their stock price is going to trade at a discount right now. And there's a lot of companies like that out there. But again, for 26 million people to be having filed jobless claims, and the market right now, I didn't check since we've been talking for a little while, but the market was up on a $4 million jobless claim number this morning. That's to us a sign that there's still a little bit of a disconnect between how the market's reacting to what's going on in the world around us.
Right.
So we would move forward cautiously.
Okay. One of our viewers would like to know, he says, I put everything, stocks and bonds, into cash when the Dow was at 26,000. What should I be looking at to determine when to re-enter the market?
Again, when to re-enter, the question is from a starting point, hypothetically, they have money invested in stock and bonds, and is the question to pull that out and push to cash and then wait for a downturn? I wouldn't do that. If you have a mix of stocks and bonds, hopefully you've had an objective to begin with and a risk tolerance that would have set your allocation to say, again, 70% equity or stock, 30% bond. As the market has declined, you want a regular rebalance, which means taking a portion of your fixed income or bonds, which have been hopefully relatively stable or positive, selling a portion of those to have the capital to buy back into your equity investments as part of just a regular rebalancing. I think it's going to be very difficult. This market is not operating rationally, so it's going to be very difficult to try to predict getting out and then getting back in at the right time. And I think the last few weeks have been a great example of that. Whereas when it got really bad and it felt like the world was about to end, the market immediately rallied almost 20%. So if you had made that call on the wrong day and missed the 20% rally, by the time you kind of get in and out, it really presents too many opportunities to lock in loss. So again, I wouldn't sell everything and go to cash and wait for it to get worse. I would identify, what is my original objective? Can I retweak my allocation to get back in line with my original plan? And if you have cash and there's individual opportunities that you want to take advantage of, I think, right now is probably a good time. But I think that question sounds too much to me like trying to time the market, which I wouldn't advise.
Gotcha. Thank you. Another viewer, and this is directed towards you, James. What size of income assets do I need to have before engaging a planner? How do I know if I'm big enough to afford a financial planner?
That's a great question. And I should have mentioned this before. We at Silver Pine intentionally do not have a minimum investment amount to work with a client. We think everybody should have access to sound financial planning and investment advice. So we purposely don't have a minimum. And especially now, I mentioned our financial planning process, which is a fee-based monthly subscription model. We're even reducing or eliminating some of those costs, and we're just kind of trying to focus clients on getting through these near-term challenges. So if you have questions, if we can help, feel free to reach out. Every office, every firm is a little bit different. There are some firms that don't have minimums and operate under a fiduciary standard like ourselves. There are some firms that don't have minimums that are broker-dealer relationships, which is a little bit different. I don't necessarily want to get into right now. There are big wealth management firms that you need $2 million, $5 million before you can knock on the door. We position ourselves as a resource to people who are doing pretty well, want to engage in a good, sound process, and are willing to kind of commit to working through that process.
Okay, awesome. Thank you. Um, I guess if anyone has any other questions, please type them in now. But before we go, do you have any other like last minute do's and don'ts for us in our personal finance plans? I know you touched on a lot of them, but
Yeah, again, I would say don't panic. Take a deep breath. Assess your situation. Don't panic sell. If you have to sell, come up with a game plan of where you're going to get it and why.
mm,
Definitely, if you can afford to invest more, you should do so under a prudent plan, but now is going to be a good time to invest. Be proactive with your cash flow. Call the people that you pay money to in the form of a bill and see what options you have available to you. If you are affected as a small business owner and you haven't looked at the PPP or the EIDL loans yet through the Small Business Administration, you should definitely do so. The government just passed the second round of funding to those programs, and it's not going to be there forever. So if you're a small business owner and you've been on the fence about that or not really sure how to do it, um, we're happy to help. So let us know if we can help you do that, or if you have a relationship with a bank, call them, and you should do that immediately, because again, that's not gonna be around. You should refinance your mortgage if you can. Be conservative and cautious with the investments that you make. Try to build up some cash if you can for what we would anticipate to being a pretty long process here to get back to normal, and just prioritize what's critical, what's important to you, um, and don't get carried away with online shopping right now because it's the only thing most of us can do.
yeah,
Yeah.
awesome. And I know you had like there's a ton of research or a ton of information out there on what everyone should or should not be doing.
Hmm.
Do you have any references or sites that we should check out? Easy
Yeah, I
access.
could just pull this up right now. These are a couple websites that we feel like we're sending to people fairly regularly.
Okay.
The SBA, the Small Business Administration, their website has a lot of good information about the PPP and the EIDL loans. Those are geared towards, again, small business owners, but that also includes the self-employed or solo entrepreneurs. So if you feel like, well, I don't have payroll, that's one thing that I've heard from a lot of small business owners or solo entrepreneurs is, well, I don't have payroll. Well, yes, you do. It's your own. So you are eligible for those loans and you should definitely take advantage. So call with questions or let us know how we can help. The second link is for the Massachusetts Unemployment Division and filing your claim. That's run state specifically. So if you're in Connecticut or New Hampshire or any other part of the country, just Google whatever your state is and unemployment, and that'll come up. It's all run through the state. Um, People have questions about stimulus checks. So there's a lot of good information on the IRS's website specific to coronavirus. So those next two links have to do with where your stimulus check is, and then other information about what tax relief is eligible. There's a lot of different provisions that I feel bad for CPAs this next two tax seasons because there's so much relief built into these bills and tax code that if you wanted to dig in there, there's some information. The last one there is SCORE, which is affiliated with the Small Business Administration. If you're a small business, a startup, the SBA has mentors out there throughout the country that you can reach out to specifically now to help navigate you through what's happening, both from a business planning standpoint and then from what resources are out there filing for some of the loans available, and as things change, just being a good resource. So these are just a handful of the ones that we feel like we're directing people to most often. And on the bottom there is our website, my contact information. So again, feel free. I should have mentioned it before, but we're happy to help. If you don't feel like you have enough money or wealth to engage with a wealth management firm, I would tell you that you're wrong. And we have clients in all different shapes and sizes and phases of their careers. And we're here to help and answer any questions and just be a resource through these pretty crazy times.
Okay, awesome. And for everyone listening, I will be sending out all of these links and well, just the slide in general to you guys and Jim's information. Yes, someone just asked if you'll email this to us. I will. Again, Jim has been and Silverline Pine Cap Silver Pine Capital have been gracious enough to come and join us today and offer their services. So please reach out if you guys have any questions. As they said, no one's too little or too big for them. So Jim, just to wrap up, 3 biggest takeaways from your presentation.
I think the 3 biggest takeaways are to not panic and take a deep breath, reassess your situation, and then really be critical about, the things that you need to do moving forward. So take your time, assess your situation, and really come up with a strategic plan and be really proactive. Things are happening really quickly, and you should take advantage of the opportunities that are out there, and just be really proactive in your situation.
Okay, awesome. Well, thank
All
you
right.
so much for
Thanks
joining
for
us
having me.
today. And again, I will email those resources to everyone that joined us. I know some people were in and out too, it seemed like, so everyone will get that. And thanks again, Jim, and I look forward to
Thanks.
speaking with you soon.
Likewise. Take care, Chelsea.
Have a
See you
good one.
soon. You too.